What's up, everybody? I'm gonna talk a little economics here. Little economics. All right, let's go over some of the numbers this morning. First of all, Challenger job cuts. Job cuts up 42% in December versus December of last year, up 25% from November. The whole year 2016 was down versus 2015, but that's understandable. We had good fiscal flows the whole 2016, and I've only been talking about the slowdown in fiscal flows since the beginning of the fiscal year, so like since October, really kind of since November. So it's normal to see those job cuts. Job cuts, yeah. Now, the initial claims for unemployment benefits, those dropped by a lot. They went all the way down to 235,000. 2 weeks ago they were at 275,000, which I think it was like the highest level in 9 months. And interestingly, because I checked out the report because I thought, maybe it was the holidays or something like that. People, on the holidays, maybe deciding not to file for claims that week. In the report, the Bureau of Labor, the Labor Department said there was no particular thing that was impacting it. So the reading is the reading. By the way, if you look at the unadjusted number, the pure raw number, the non-seasonally adjusted number, that's up to about the highest level in almost a year. Okay, so with the seasonal adjustment, it brought it down. We'll see what happens. I can tell you this. I track the momentum on that thing. Actually, I track the momentum on the unemployment benefits. That is the number that I get right off the daily Treasury statement. And that the momentum on that, the 5-day rate of change on those unemployment benefits, and nobody else does this, okay? Like so many things that I do, nobody else does it. That momentum is at like a 1-year high. So just, take it for what it's worth. Markets now, dollar getting hit. Just like I said, we're down into 115 handle on dollar yen, 105 on euro dollar. Everybody been talking about parity, right? Australian dollar looking good. So dollar getting hit, and this is what I'm saying, what I've been saying, and I'm the only one who said when rates go up, the dollar's going to go down. And I explained it to you. It works the same way as the bond market. A dollar, okay, a currency, is like a bond with zero maturity, right? So, the rates go up, the bond goes down. The rates go up, the dollar goes down. Why? Because that reflects the implied yield out on the curve. And by the way, as long as we're talking about this, same thing, but in reverse for gold and commodities. For gold and commodities, the curve reflects the cost of storage, right? Gold doesn't pay you anything. It costs you to own it, storage, interest, etc. So the slope is usually positive. And in a rising rate environment, the further out you go on the curve, and by the curve, I mean the forward contracts in gold, the price is higher because it reflects the higher cost of interest. So that means gold prices rise, okay? And that's a cost to you, right? It costs you more to buy it in the future. You see how that works? Same thing with commodities. Normally, in a rising rate environment, the commodity curve is sloped positive. So, this is very simple to understand, but everybody's like, oh my God, rates go up, people going to sell gold. No, it works. Rates go up, they want to buy the dollar. It should work the same way with bonds. Rates go up, they're going to buy bonds because it's such a great return. No, you sell bonds. At some point, yeah, when the market expects that rate hike environment is ending, yeah, then the bonds start to rally. So that's how it works, okay? If you have that understanding, you could take so much money from these imbeciles who don't know what they're doing. And that's what I do. That's what I do. Okay, that's what the MMT Trader Report is all about. Listen, I got to get to work right now. I'm on a writing deadline, but for those of you who do not have the 30-day free trial of MMT Trader, go get it! The heck you waiting for? Come on! Every single closed out trade from that report has been a profit. And by the way, I talk a lot about the macro picture. We have a lot of stocks on there that are doing really, really well. All right? Some of them will take some profits on very soon. Go to pitbulleconomics.com, click on the tab that says products, and you'll see a link there that says get your 30-day free trial. So go ahead. See everybody later. Bye-bye.